Good morning, everybody. It is Saturday, May 4th, and we're going to go over the CoT report for this week. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We have had some good weeks and trades on these CoT videos the last few months, but this past week has been one of our best. We'll review these, look at changes to the week ahead, and there may be new trade ideas as well. We'll start off with the SPX as we always do. Commercials are holding steady with their short position. They did cut about 24% of that position into this past week's drop. And as expected, our major levels worked well from last week's video. These were our levels from last week, and this is how it played out for the week as it went ahead. Commercials are still net short, which will provide a reason for a headwind to sustained upside, although our calendar is pretty light this week. Just remember, these positions do take time to play out and to unwind, and we have CPI, PPI, and OPEX the following week. For the next week ahead, our big pivot will be 51.29.5 to 51.37, and that is this blue level here. To the downside, we would look for support to come in at 49.92 or 49.47 if we get down there. To the upside, we'll watch 52.04 half and 52.48.75 for resistance to come in from the commercial side. The relationship between the 1 and 3 is not looking good at the moment either, but it can also provide more fuel in either direction.
Bitcoin. The commercials of SPX are like my dad sometimes, being a party pooper. But now for Bitcoin. Not back in play just yet, but commercials did cover a good portion of their short in the last few days. They have been nailing these moves and controlling this market well, so we will keep a closer eye on it as the signal develops.
For the commodities side, gold played out perfectly this week as we were expecting major support at our lower level on the QRA and FOMC on Wednesday. And this trade paid out the easiest 45 points very well. Commercials are still near a max short position on their 1 year, but still have room to go on a 3-year duration. So we could still see some more hedging behavior, which would again lead to an increase. We've reviewed that aspect in oil on the WTI physical product in the past. You can go back to our older videos to understand that relationship. This is what our week looked like from last video, and this is how it played out. And that 29.91 to 29.80 or 22.88 was our major level we were looking for the support, and we had the perfect ping pong game right back up to 23.45. For the week ahead, 23.38 is our pivot for the upside to our target of 23.92. And under 22.90, we'll target 22.55 and 21.93.8. That's where we'd look for support to come in. Between 22.91 and 23.35 will be our early rotational zone for the week that we're going to watch. But I think a break outside of that is more likely. These are all references you can use on your own charts. Into the currency markets now we'll go. On the 6A, commercials did reduce their position by 20% last week, as they had been at a new 3-year max position size. We held the pivot mentioned last week of 65230. So it was right here, and we hit our first target and almost got to our second target of 668. If you were trading full-size contracts, that was $5,500 per contract potential just using this plan. And even on one micro, it was probably the easiest $500 of the week. Now the signal gets less clear, so we're going to wait for the easy money setups to show up again. On the 6C, nothing changed here in terms of levels, although commercials did cut a good portion of their position on the week into the moves higher. They're now about 30% below a max position, and the edge is limited. We still had the same levels playing well this week as the prior week, and you can see that right here. Spot 72825 is really where we were going to watch for support, and we will again in the week ahead. That would be your exit from a long, or if we get underneath that, you could look at a short, although I am more looking for the long side. Our pivot level is 7.3, spot 7.3443. So this yellow level here. And these same levels can be used again, although, as mentioned, with that 30% drop in position size, the setup now becomes less clear as it was. Gold and SPX have updated plans for this week. For our professional subscribers, if you request it in our Discord, I will provide you with our natural gas plan for the week. Moving forward, we will also provide our earnings setups for our subscribers in our professional room, as this week we nailed Google, or in the last couple of weeks, we nailed Meta on live trading, Google and Microsoft, AMD and Amazon this week. And that's about it for this earnings season. We did well on NVIDIA in Q1 earnings, and now we'll do NVIDIA again on May 22nd, so you can join our professional room before we put that one out. Otherwise, we will provide earnings trades as we head into the next earnings in July and June and July. If you want to check us out, Sticks Trading Academy, we are on Twitter. Our courses and access to our proprietary tools are listed on our website, as well as our Discord options. Have a great weekend and stay safe trading next week.